So we're going to discuss about adjustment, year-end adjustment, or month-end adjustment. Okay. So from what we have recorded before, our figures that we identified and reported in our trial balance might not be accurate. There are certain reasons. For example, the equipment that we use might wearing out. So we need to provide depreciation. We need to reduce the value of that equipment. Or maybe some item, for example, insurance that we have paid before this already being used. Or there are also maybe employees' salaries or wages that not yet been paid. So all these items, all these event should be considered, and we should make certain adjustment to our balance in our trial balance. So this is the thing that I'm going to cover today. So in accounting, we have this revenue recognition principle. It states that revenue should be recognized when earned, regardless when cash is received from the customer or not. For example, if you sell something to your customer, you provide services to your customer, they paid you by cash, that is considered as your revenue. Another example, if you provided the services to the clients, but they told you that they didn't have the money yet, they're going to give you the money next month or next week. So that amount of money, you don't receive the money now, but the revenue for that revenue, you still record it as your service revenue or your sales revenue, regardless whether you have received the cash or not. Okay, so that's why when we do our adjustment last week, journal entry last week, when we don't receive the cash, we just record it as debit account receivable and credit sales. All right. If we receive the sales, the cash sales, so we're going to debit cash, credit sales. If you don't receive the money, you're going to debit account receivable, credit cash. But the sales or revenue account will immediately be recorded even though you don't get the money. So that is the principle of accounting. We want to identify what is the real revenue regardless you have received the cash or not. So revenue are considered earned when service is provided or product sold. Once you provided the service to your clients, you sell the item to your clients, so that become your revenue. However, in certain cases, your customer might pay in advance, give you the money. You need to provide the service maybe next month. Though you receive the money, but you don't provide the service, so you cannot record that as your revenue yet. You cannot record that as your revenue yet. So that is the principle here. For expenses, it states that expense should be recognized when incurred, regardless of when cash is paid. What does it mean here? You incur the expense, but you don't pay the money yet. It's still recognized as your expense. So expenses are generally considered incurred when services are received or assets are consumed. For example, yesterday I received my due bill, my internet bill. Yeah, it's 400 plus. I don't make any payment. I'm going to pay next month. But that expenses is for month of October. That expenses is for month of October. So in my October account, I should record that is as my internet expense or telecommunication expense. So this is what I call as revenue recognition and also expense recognition. Principle is based on whether expense has incurred or revenue has earned, whether you have given the service to your clients or sell the item to the clients. Okay, and under matching principle, we are going to match this month revenue with this month expenses. We are going to match the same using the same format. If you're comparing this year income we are comparing with this year expenses. So that is the important to identify what is the real expenses or revenue for each particular period. And in accounting, we have a fiscal year in which we prepare our account in every 12 months. In every 12 months, it varies between company, varies between countries. Yeah, in Malaysia, in my home country, normally the account close on 31st December. It means the account start on 1st January and they're going to close the account on 31st December. But in Australia, most of the companies close their account on 30th June. On 30th June, mean they start their accounts on 1st July, that is for 12-month period, and they're going to close the account on 30th June. So they can celebrate Christmas earlier. Yeah. In Malaysia, they can't celebrate Christmas because the accountants are busy to close their account. So in New Zealand, they close their account most I can see most of the company close their account on 31st March. So it vary between countries, between companies, and between the management style. But generally, I can say that the period, yeah, is for 12 months. Yeah, is for 12 months. Okay, let us look. Yeah, the company can decide. The company can decide. Yeah, it's not unless it's mandatory by the government. But most of the country they let the company choose when they want to close their accounting periods. Yeah. Okay, let us look at this adjusting entry. How are we going to do adjustment to the Rohan? This is an example from this textbook. I made some amendment. It might be 100% similar with what the textbook. Yeah. Okay. During June, maybe 2nd June, Rohan purchased supplies, the office supplies, maybe papers, stationery, or whatever, for $80. These were debited to the supplies account. So when we have this, supply is our assets. Supply is our assets. So plus increase debit minus on the credit side. So what we did is previously we did record 2nd June, for example, cash 80 dollars. So this is assets, yeah. This is asset. Supply here is asset. Okay. Later on 30th June, when you want to close your account, you check your stock, your inventory of supplies, and you found that your supplies on hand is now worth only $20. So on 30th June, when you check your account, you found that your supply is $20. Where is the $60 gone? Huh? So the
Is it we
$60
made the payment?
you use the supplies, the paper, the
Okay, used.
stationery, the pen, the toner, or whatever been used already. This is supplies. For example, I can say papers, yeah, maybe papers, toner, maybe stationaries or whatever. You only check you have only few left. Mean you already used the $60 of supplies. Yeah, if this office supplies. So in this case, if you don't do the adjusting entry, the balance for the office supplies will be 80, which is not correct. So you need to do some adjustment. You need to do some adjustment. So you purchase the supply during the month $80. The balance is $20. So the supply used is $60. So you use supply. This will be your expense. This will be your expense. The 20 is your assets. 20 is your asset, 60 become your expense. Let me repeat again. You purchase $80. At the end of the month, your supply is only $20. In other words, you already use $60 supplies, yeah, of $60. So this $60 is your expense. Your assets now is not 80, it should be 20. So that is the reason, example of the reason why you need to do adjustment. Why you need to do adjustment. So I'm going to reduce my supplies, my assets from 80 to 20. How I'm going to do that? How I'm going to do that? I'm going to debit or reduce it by 60. This is plus, remember, asset. This is minus. So I'm going to credit my supply by 60. Mean 80 debit, credit 60. That will give you a balance of 20. Is it okay? 60 is credit to supplies to remove the amount of supply used during the month of June. This is assets, yeah? Always remember for assets, plus and minus. That is the formula. So I'm going to credit the supplies account by 60. So the balance will be 20. Okay. And then what happened to the 60? I'm going to debit that one as another account. I have another account, I call it as supply expend. This is the expenditure or expenses incurred for month of June. I have new type of expend, supply expend. I'm going to debit this by 60. I'm going to debit this by 60. So always remember for expend plus minus, plus minus. Increase in supplies, debit, yeah, reduce in asset, credit. So the account will be like this. The journal entry for these transactions will be adjustment, will be supply expend, debit 60, supply assets here, credit be reduced by 60. So we'll have here 60. This is what I mean. 60 credit and debit 60. Let me repeat again. For the first example, we need to reduce the balance of our supplies. Okay, previously we have 80, but when we check the balance now is 20. So we need to minus or deduct 60 from our accounts. How are we going to do that? Supply is asset account. Any increase, you're going to debit. Any decrease, you need to credit. So I'm crediting the supply accounts by 60. So this supply account before these assets, now it become expense. It become an expend. The supply expend, increase on the debit side, decrease on the credit side. So it's going to be debit, supply expend 60, credit supply 60. This is assets. Okay, so if we do this, then our income statement will be correct. We have another item, supply expend 60. And our balance sheet will be correct. Why? Because we have the supply expend 20 instead of 80. Instead of 80. Any questions on this? On this first, on the first, for this first example? Yeah? No?
Sir, we don't write cash.
Which one?
Total total
For the
80.
60?
80.
For 80 here? For
Yes,
80, maybe
sir.
previously we paid by cash. That's why we have cash here. Yeah. But my interest now is not this 80. This 80 is not correct now because the balance is 20. So how we are going to adjust the balance? That is the question. So you need to credit by another 60. So this is the adjustment. So this is adjustment. Yeah? So this is the adjustment. And then we're going to credit that. We're going to put it as your supply expense. Supply expense. Debit, supply expense.
Sir, one more question.
Sure.
This separate from this, but I'm confused about balance of credit debit. Uh, where we put balance credit and debit.
For you,
Sometimes
for you.
sometimes we put it at left side and sometime at right side.
Okay, for bank, bank is your asset. Am I right? Cash at bank, this is your
Sir,
cash at,
no this one, no this one. Balance of credit and debit.
or balance, whether it's going to be debit or credit.
Sometimes we put in left side and sometime at right side. I'm confused about it.
Okay, sure, no problem. Okay, you have to check here if this is assets, if this is assets, asset, expense, or drawing, okay, the increase will be on your debit side, the decrease will be on the credit side. Am I right? Okay.
Yes, yes.
So most of the time, your increase will be higher than your decrease. So for
Yes.
example, your total debit here is 1,000. Your total credit is 800. So the difference in this example will be on your credit side. The 200 will be here. This is your balance. Yeah, your balance. For example, your cash. If you have a cash account, this is your assets. Your total debit is 1,000. Your total credit is 800. 800. So your balance is 200. Okay. In certain instances, there might be situation where your cash is 1,000 debit side, but your credit side is 1,300. What does it mean? Your money out is greater than your money in. So in that case, the balance will be here, 300. 300 will fall under liability. This will be your liability. This will be your bank overdraft. Meaning you are borrowing from the bank now instead you keep the money in the bank. Now you borrow money from the bank. It's like credit card now. Okay.